Hello everyone, can you hear me? Loud and clear, perfect. Just because I'm in front of the microphone. Okay. So as I said, just 3-4 minutes so everybody can join in time to connect the stream, and we will start, so I will not repeat the same thing again and again. The stream will be recorded, but I really suggest to be online right now so you can ask me questions in the end of the stream and so on. I've just noticed that today finished my subscription for TradingView, so I will use these 2 minutes to upgrade it back. Yeah, now everything should be fine. Okay, I think we need to start. Let's not wait for the others. They will watch in the recording. So today the video about the strategies, how to use the strategies, what is the trade plan is about. For crypto, for Forex, I'll share the example of the trade plan that I'm sharing with my students in the academy. I'm sure it's not like the Holy Grail that you can copy and you can use that and it will help you, of course. I mean, it will help you, but it's not something that you can just copy and use it and you will be profitable for the end of your life. No, this is just a brief example that can help you to create your own trading plan that suits your character, your mentality, your psychology, your deposit, and your time zone, your favorable market, and so on. So just the echo. Do you hear the echo right now? It should not be any echo. Yeah, so that's something that you can use, adopt, and it will be really helpful. Those who are waiting for the signals, guys, that stream is not for you. I mean, I'm providing the much better than that. I'm providing context, I'm providing timings, knowledge, experience, but definitely not the signals. So, in the end of the stream, it will be a time for the questions. I hope that it will be smart questions. So, for the smartest question, those who are not in our academy yet, they will receive the library and the articles and the automated trading journal, as always. That can really help you to start with, and even without a community and without the live conferences and morning calls and professional psychologists and so on that we have in our Discord community, it still will be really helpful to you to organize your trades, to organize your time, and to combine your work and trading. So do not hesitate to ask really smart question to get that thing. If you want to be profitable, I mean, even just if you don't have time for education and you just simply want to follow the signals that are basically it's a scams thing, you still need to have some knowledge to understand either these signals are good signals, or will they suit you, or maybe the term of these signals are not suitable for you, and so on. So you need just to understand what are they about, and does somebody trying to scam you, or it's something that can be really helpful and can help your trading, even if you don't have time for your own research and education, of course. But I'm definitely not suggesting to go into the market, because most of you they're still using the triangles, cup and hole handles, and what else? What else do you like? Support and resistance lines, and wages, flags, and all these things like indicators, EMAs, Bollingers, profile volumes. All the things we are not using, because we are, as a smart money traders, also I don't like to use this word, because I mean it's starting to be a little bit how to say that, not proper in the marketing plan. I mean, a lot of people are using all these names of the smart money, of this ICT, but they really don't know what is it about, and what logic is behind these names of these order blocks, imbalances, fair value gaps, and sponsored candles, and point of entry zones, and so on. So I'm just saying that if you can understand how to read the chart, if you know how to read the candles, the price action itself, you don't need all that indicators, you don't need the bit of the depths, you don't need to look at it, you don't need to look for the profiles, you don't need to be a scalper to trying to push for that liquidity to get some luck on the 30 seconds things. I mean, that has no logic. When we are saying about the conscious trading, about wise trading, that's something that can be I mean, about the terms of holding the trade. It's something that if Forex, it can be like intraday, I guess, the best thing. If indexes maybe a little bit longer than intraday, because it's actually indices are the best thing to combine, to trade them and to combine it with your main work, because most of the people, they don't have time to trade Forex during the kill zones, during the London kill zone, New York kill zone, and so on, because they have the main job. Yeah, and what about crypto? Crypto, of course, I'm not suggesting to use the low time frame for analyzing a trade, because it's mostly a noise. It has not too much volatility on the market. So of course we are, as the traders who are watching for the candles, who are watching for the logic, we need to get the technique charts, and if the charts are not technique, so there is no reason to take them, especially like a shit coins that are just came into the market, and they, you know what, they like they have capitalization of a couple of $millions, and you're trying to look at the chart and to predict the price for the further movements. Come on, it's just like a gambling. It's something like you're coming to the casino where all the where all the cards are I mean, well known by some kind of scam thing, or I don't know. So, I mean, you need to understand that if you want some technique about the price action on crypto market, you need to look for the high time frame at least, or for the big capitalization shitcoins, altcoins, not shitcoins, but better altcoins. What I mean, the like Link or Atom or Uni, Sushi, ICP, the one that you heard a lot already, yeah? Not something like Bonk, or even if you did some profit before with these coins just because it is like a small, let's call that bull run, yeah, for a couple of months before the ETF will be approved. You still can earn on these coins as well, but that's mostly will be a luck. You will not know where to close the chart, where to fix the profit, where to open it properly, where to put your stop loss, how to manage the risk, and so on. Quite soon I will post a video about the risk calculation on crypto and forex, so I will so detail explain about the leverages and about all the thing, how to use, how to calculate, and I mean, come on guys, that will really help you. I will explain about the win rate, about the statistics, so I'm really suggesting you to watch that video a little bit later on the next week. So yeah, let's get back to the trading plan and to the strategy. Most of the things that I will explain right now you didn't hear before, because you don't even understand how to combine that, how to use that, about even that information. You need some time to learn. That is why, I mean, I have the academy where you can learn that thing, but I will try to explain most of the points inside of the strategy, so you can understand how the professional trader should look like on the market, on the chart, and how to take the decisions, which rules do the professional trader has in the arsenal, and how to use them properly in the forex and in crypto market as well, and what are the differences between that. So I will go for our mentorship, where we have all that library and so on. That's our trading plan, and I will go through the points in our strategy and in our trading plan, and I will switch to the charts all the time to explain the points that are inside of it. Again, I will tell that this is just a briefly plan, and that's not something that you should use just by copy paste. By the way, if you will just try to use that, it will not work for you. As I'm saying once again, this is just the thing that will help you to organize and to create your own one that will suit you. There is no Holy Grail that can suit any trader. Yeah, there is. If you have the knowledge, you can adopt it first of all to yourself, and secondly to the market, that the cycle of the market that is right now presence. Yeah. So, but anyway, there are some crucial rules that, of course, they will never change, and you should understand what are they, and so on. So, the trading plan, trading rules, trading notes, daily trade plan, instruments, time frame combinations, risk management and trade management, entry criteria, setups, workbook, and demons. These are briefly 10 things that you need to understand and to follow when you are starting to trade. So, first of all, the trading plan, what is it about? It's about the thing that you should have before you will come to trade anything, any signals, any your own strategy, any market, any asset, any pair, any new time frame. You need to backtest it and to understand what works for this asset, what's not working, what is the statistic, what is the win rate, and then to adopt it and to use that as a robot after you see that it works for you on the backtest. And this is the hardest part. And not all of you are ready for that. I'm pretty sure that some of you are just so lazy and will not do that type of work, and it takes a time. But for those who will, for those who are ready to participate, who are ready to learn and so on. Believe me, it's something that can be even better than a Holy Grail, and if you can use that properly, you will be so profitable. You will be a founder trader as soon as possible. I mean, with the proper work. And there is no water over here. There's only the things that you need to have in your own trade plan. So, the basic things. It's about what are the maximum daily loss. Some of these rules are made for help your psychology, because most of your psychology are, even my psychology is weak, and so on. So we need to have the rules to avoid our gambling characteristics in ourselves. So, for example, the maximum daily loss is 1%. What I'm saying, that if we are taking the trade, and let's say we have always, let's use like $10,000. That's our initial deposit for trading. Yeah. So 1% of the initial deposit of $10,000 will be our, what is it, $100. Correct. So that's the risk that we can allow to lose per day. Yeah. You should understand that. And then when we will draw the position, it doesn't matter how it looks like. Is it the stop loss is like that, like that, like that? What means the 3R or 3 risk reward? That means that the risk reward, so that the reward should be 3 times more than the size of your risk. Yeah. So means if you're risking 1%. This one is 1%, this one 1%, this one 1%. So to earn potentially 3 times more, or 3 times your risk reward, it should be somewhere like that. Yeah, it depends on the time frame that you're using. Depends what you want, type of trade do you want to enter, and so on. But it doesn't matter how it will look like here. It will be still 1%. The only difference in these trades will be the quantity that you will put inside of your trade. Yeah. To put your stop loss, you should put it always where the idea of your long trade will be invalidated. Because, for example, if the price will go lower than this point, yeah, that will be a short context, and of course, going for and hoping and waiting for your long will have no any other reason or sense. So that is why the stop loss should not be just because it is a stop loss and you need to use it, but it's a stop loss where you need to put that will invalidate your idea of your trade. Yeah, that's the most important thing. Next thing. So if we will say that our 1% is like $100, yeah, so if the price will take your limit order somewhere here and it will go there, then you will lose $100. That's all. That's what you need to know. And that's now you finished your trading. You don't want to try to gamble or to say like, oh, okay, it's stop loss, so I will open short right now. You start opening short, then the market will go like that, and now you have -2. Then you said, oh, okay, so the market finally decided to flip it again. You're opening here. Now your risk reward is not 1%, yeah, because you lost already 1. So it's like -1. Here is -1. And now you're saying that, oh, I know the market flipped, collect some liquidity. I'm sure it will go to my targets that I've set before. So I will put more risk right now into my trade to have a revenge of the previous one. So I will put the risk like of 3% right now. Yeah. So it will be $300 right now. Now the price takes it, and now you're going upper, but then it will just continue to go lower, and again you will lose the 3% of your initial deposit. So by just not losing 1%, you lost 5%. That is quite crucial and a huge amount of your initial deposit that it will be quite hard to get back. And you need to understand that, yeah, losing $500 per day of your like 5% of your initial deposit of $10,000, that's quite a huge amount, and you need to understand that. And this is the rule that you need to use. Okay, next thing, maximum weekly loss. Sometimes it will be the situation where you will catch a loose streak or something like that, where it happens. The market is cyclistic, and of course you might get some loss, the trade after trade. So today you get one stop loss, then you wake up tomorrow, you decided, oh, let me trade one more time, yeah, and what happens, you're catching the stop loss again, and then third time again. Yeah, of course, after catching 3 stop losses in a row, that means that you doing something wrong. Either the market is not suitable right now for your setups, or maybe for trading at all. Maybe the timings, maybe something wrong in your strategy. Yeah, it just basically means that if you have the loose streak, you need some time to have the strategy revision, to understand maybe you can find some kind of mistake and so on. Yeah, so take that as a rest, take the time for the analysis. So this rule is so crucial to use as a maximum weekly loss to avoid your further tradings. Yeah, because next time, if it will continue, it will be the problem not in your trading, it will be a problem with your psychology, and that's something that can help you with it. The weekly plan. The weekly plan is something that can also help you to avoid over trading, yeah, because there are some kind of things where that's all about the psychology. Once again, let's imagine that this is 0, yeah, the 0, that's the when you don't have any good emotions and any bad emotions. Yeah, you're like a robot, you have 0 emotions, and that's what you need to have on the market. So when do you have 0 emotions on the market, that's a good psychology for trading. When you're catching a stop loss, you're catching the negative emotion, and let's say this is like a deviation from your balanced mindset, right? And any deviation, either it is like a -1 let's say level, or a +1 when you have the euphoria from your trades and so on, this is not a good thing. So when you're catching the -1, you need to stop trading. Yeah, when you catch the profit trade, you have the euphoria, but that's still not a 0 value, that's a +1. This is a deviation from your psychology, and that's also not the proper time to continue trading. So that is why, not to pretend that you're the king of the market and so on, you also need to stop trading. That is why you need to have your rules. When you have your goals, and when you're reaching your goals, you're stop trading, and either you're waiting for the payout to confirm your profits, not just on the number on the web, but just feeling that cash, right? To see that you're really earning some money, or either just like waiting for the second week to get the new profit target. That's all been made about your psychology, so it always needs to be 0, right? No any deviations, because you know that even from the rules of the range on the market, yeah, when we have the range, any deviation, any collection of the liquidity will cause us the extremely fast movement to go other side of the range to collect another liquidity. So believe me, if you will overtrade here in the euphoria, you will go for the stop losses as quick as possible. That refers to a trading, that refers to the graphic of your mindset and so on. I hope that helps. Next thing, let me just give me a second. Some people trust or not trust, what is it? Okay, next thing, I'll go a little bit quicker, so we're gonna get all the points that are a lot actually in the trading plan. The maximum 1 cup of coffee during the day, that's a personal thing. I mean, you need to have a strong mindset. Positions open during the kill zone session, so you should understand that for me, for example, as I'm mostly a Forex trader, let's go for the 5 minutes time frame. So during trading during the trading sessions only, that means that we have the Frankfurt session that holds only for 1 hour, and the London session that holds for 2 hours. So basically that's 3 hours in total per day. When I'm trading either on the half an hour on the Frankfurt trading at the beginning of it, either in the first half an hour of the London session kill zone. If so, basically like 1 hour in total. If there is no entry for me, any trade for me in these types of time, I'm simply skipping the day and waiting for the another one, and that's all. I know that any other trades that I will try to take not in my timing will either make my psychology more weak, either I will spend a lot of time in front of the charts that will make my psychology weak, either the chart, of course, having the lower volatility than during the kill zone sessions, and that's definitely will not make my trade to happen or as fast as I want. Yeah, so I will maybe need to wait for 3-4 hours during my trade that I don't want to sit in, because my psychology is quite weak and I like some quite fast type of trades. I don't want to sit in for like 3 hours, 4 hours to make it happen. Yeah, because my thoughts in my brain, it will be like, oh, maybe I need to put to the break even, maybe I need to close it earlier a little bit, maybe I don't like how the volatility is going on, maybe the price will go back if it's not volatility to my entry, right? And I will catch the break even, or even maybe the stop loss if it will happen, something like that. So I don't want to that thing to harm my personal psychology. So I have rules to keep my psychology strong all the day, every day. Next, positions. Weekends for rest. Yeah, that's again about your psychology. I'm saying that because the psychology is so crucial thing. You know that I'm frustrating a bit someone from the Blue Whale group and from the public chat and so on. They keep asking me every day about, is there any trade? What do you think about that? What do you think about that? Because you like to over trade. You're just waiting for a signal every minute, 24/7. And believe me, that will not help your trading if you're not resting from the chart. I have a personal problem. I can't avoid even looking at the chart one single day. I can't do that. That's just part of my life, and I mean that's a problem for me and for my psychology. But of course, I will not trade during the weekends. There is no technique price action during the weekends, no volatility during the weekends. First of all, my Forex markets are not working during that 2 days, Saturday and Sunday, and of course that's not a good opportunity to trade crypto on any time frames during that days. So what do you need to do for that time? You need to spend that time for your hobbies, for your personal life, for your sport, for your gym, for analyzing or for backtesting the previous week, for having noting your trading journal, analyzing the backtests, making some work, pre-session work, after session work, something like that, but not trading at all. And that's definitely, I mean, the most important part. Next thing, it's trading after closing more than 3% or more per day must be stopped. So my strategy is to do the 3-to-1. As I told you already, the 3-to-1 means if I will catch a stop loss of 1%, I will finish my trading day. If I will catch the profitable trade of 3-to-1, the one that I'm looking for all the time, yeah, it means like the 1, 2, and 3 part of my initial stop loss. So I'm losing $1 to potentially earn $3. So when I'm reaching that amount per day, I'm closing my trade day. That's all. If I will for example, the Asia for me it's at night, so the Frankfurt happening for me in the morning, and if in the Frankfurt I'll take the trade, that will be like 3-1 or something like that. Yeah, I will just, it may happen, I don't know, for let's say 9:55, 10:30, so like 30-40 minutes, and I'm done. That's all. I'm not sitting in front of the charts, I'm not waiting for something else. I don't think that, oh, maybe I will catch something else in New York. No, that's the thing that will not help you in your trading. Try to avoid that. That also works for the crypto market. You should understand that if, for example, in Forex you might find the opportunity almost every day, in crypto that's a little bit, it's a slight difference. In crypto, the situation is different because most of the time the trades that can happen to you are on a Saturday or on Thursday. Most of the time it's on Thursday, and as you can see, that thing was on Thursday in the New York kill zone when the highest volatility is. And on this reversal, if you remember, I took the trade over here. I put the stop loss above the manipulative wick, and I closed my exactly 3 air. So everything is same as on Forex. Don't think that is something different or something like that. That was a 3-1, and when I reached my zone I closed my trade, and I didn't think that, oh, maybe we will collect this liquidity as well, maybe this one liquidity as well. I didn't care. I was care about my risk reward, and I knew that that volatility after this big movement up manipulative will be enough to reach at least 3-1, and that's more than fine for me. Okay. How is it, guys? Tell me something in chat that you understand what I'm saying, and that it's helpful. Maybe put some plus. The risk management. New market situations are traded. Perfect. New market situations are traded with a reduced risk on the different account. So for example, if my setup is I want to deviate from my setup that was, for example, before, that was just euro, that I was trading in Frankfurt or in London. But for the last week and for the last 2 weeks, the GBP is performing so good, so well, and I don't know why not to trade that. And our community was taking the trades in New York all the time. All the time I was taking our community was taking the trades. So if I want to also not to skip my trading days and to try to trade during that period of time, I can I see that Frankfurt and London for my strategy is not suitable. There is no proper reversals, no proper confirmations, nothing that can help me to trade. Yeah, the euro or something else. So I'm taking my another account, my smaller account, that I'm ready to backtest, ready to test my new strategy, the same setups, the same thing, like collecting liquidity, reversal, the same 3-1, but for example on the New York and on the different asset like GBP. Yeah, because I mean, that's no, when I'm saying different setup, that's not something that is totally crucial different. Yeah, I mean, that's still the same thing, but different timings, different asset, it's already that's a different setup, right? So to backtest it, for example, I took that on Thursday as well. That was quite nice trade, and that works for me, so maybe I will use that for the next week. We will see, but definitely that's not the place to try the new setup on your main account, because if it will not work, you will lose your opportunity, you will lose your main account, and you will harm your statistic. That's something that you don't want to do. So again, as the previous day on the Wednesday, that was the good trading day. Unfortunately, not the 3-1. After some kind of sweeps of the liquidity on top, after maybe collecting the Asia, you should close your trade straight away. That happens just due to the huge huge entry zone with a stop loss, but anyway, it was still nice and smoothly and logic and technique. So that's what I'm saying. Trading after closing more than 3% per day should be stopped. That's you know already. Risk increase can be used only on major pairs. That refers to a crypto most of the time. So on the major pairs, as I told you before, there are more techniques. So of course you can use higher risk leverage, or not leverage, sorry, higher risk percentage on your stop loss. Maybe not 1% from your deposit, but maybe 2% from your deposit, if you know that the type of the trade is maybe not the lower time frame, but like a swing trade or long term. So we will get back to that point a little bit later on. Howdy, what is it, howdy? Is it a slang word or what is it? Okay, so risk increase is allowed only in positions from M15. Yeah, as I told you, the time frames lower than M15 on crypto are noise. It's not a technique movements, and that's mostly it's a gambling. So a series of 3 losing positions reduces the risk to 0.5. As I told you, you might have the lose streak, and when you have the lose streak, you might lose your confidence, you might lose your psychology, and of course, from losing 1% from your stop loss, you need some time like to decrease your risk per trade to gain some confidence again. Yeah, not to continue losing if that much that you did before. So that might help you not to harm your again your deposit, and to increase that much faster without any without increasing your risk. Because crypto is harder than Forex. Because crypto is lower volatility, and the market is not as technique. The volume, the per day that trading it's so low according to the Forex. That is why Forex is the most technique market ever. And for the conscious traders who knows how to read the trades, of course that's the best opportunity and the best market, and with the logic. But on the high time frames, there are also a lot of opportunities on crypto where you can earn some stable profit. Do not close positions without technical justification or time expiration. I think you should understand that that it's not like a binomo where you have some time when to close the trade and so on, and some lower time frame trade my execute longer period of time, not just like you were expecting 5 minutes to execute the trade, but it happens after 30 minutes. I mean, that's fine. That's not something that it's not a criteria to cancel your trade or to close it earlier or something like that. Yeah, so of course, if you're looking for like 4 risk reward or something like that, but you have the huge liquidity pool over here, and you see how the price reversing on the market, and then you're taking that you see the reversal happened, and you didn't close your trade that time. That's a mistake, of course, because I mean the reversal has happened. Why to continue hoping that the price will reach your profit target that you decided to put on the top? Unicorn? No, I think you are the unicorn with this type of questions. Do not close positions without technical justification. Okay, stop loss 5 to 15 pips. You should understand the average market diapason that it may go during the day. So of course, if you will see that your stop loss is like bigger than 10-15 pips, yeah, that's quite a huge stop loss. So I mean, the asset should have a nice volatility these days to reach your profit target according to the size of your huge stop loss. So even if everything is correct, you might skip your position just because the price has no such fuel or such volatility to get to your zones during that period of day or during the trading session and so on. So that's a crucial thing to understand, that it needs to be until 5 to 15, but I'm trying to use until 10 pips. So like something like 5 to 10. And the next thing, what are the rules that needs to be forbidden? I mean, trading in ill health, sickness, or lack of sleep, for example. Of course, you will start to see some mirages or something that also harms your psychology. Trading in an emotional state for any reason, opening positions due to long absence of setups. Yeah, for example, you're waiting that this day no setup, this day no setup, this day no setup, so for the whole week is no setup, and you just like, oh, I was not trading for the whole week, I want to trade something, I don't care what it will be, but I will just I think this is a sweep, I think this is a reversal, I don't like it pretty much, but I don't care, I will take a trade. So beside the thing that you would wait for your setup to happen, yeah, because the market is cyclistic, of course it will happen, you just need to wait patiently for your setup. But you didn't wait for that, you ignored that we collected the Asia high already in Frankfurt, and you decided to take your sweeps, to take your trade on Friday, and of course you're catching the stop loss. So beside the thing that you didn't trade for the whole week, in the end of the week you just catch your stop loss -1. Of course that's a frustration, and going to the weekends with that type of frustration, that might hurt. So I'm not suggesting to open the trade just because for the reason that you didn't open the trade for a long time. Yeah, if you didn't open a trade, so that was a reason for that, and don't be like the man who is saying that, oh, I'm tired to be without the trades, or somebody is saying that I'm just sitting in front of the chart and I'm not trading or I'm not working. If you're not taking a trade, I mean, the professional trader can avoid trading in the bad period of times of the market, and that's gonna be a good thing actually for the trader, because not losing the money means, I mean, that's much better than sitting with a zero, I mean, than losing on the market with a pure technique or no setups for your strategy. And so on. So let's move on for the trading nodes. Let me just fastly read the chart. How is it going? Looks like a retrace to the level. To which level? What are you talking about? Is it possible sometimes to wait for 3% trades to come to profit in crypto, no stop loss? For if you're gambling, yes, of course it's possible. Okay, so trading nodes. 10 to 11 EM, high probability of trade in London. That's mostly crucial rules for Forex, but that's something that you need to understand and to create for the crypto. So 10 to 11 AM, high probability of trade in London. From 2 PM, do not pay much attention to the time, because you need to match that with your time zone. High probability for a trade in New York. So that's about the high probabilities during the day when you can catch your entry, when there is a setup created for you, for your strategy, and so on. So for crypto, what I'm saying, for example, that's mostly the Wednesday, or mostly the Thursday, the time when you need to trade. The thing that I've showed you here, right? That was the perfect time, the nice volatility. The trade happened so fast. That was the setup for that. We was in synchronization with the higher time frame and with the lower time frame. What I'm saying about the synchronization, that means that we had the huge manipulation and the reversal on the lower time frame to reach some kind of retracement, some kind of pullback to the after liquidating a lot of the market participants from one of the side. So next thing, it is worse to follow the price trends regarding momentum. Recently the price does not adhere to its rules. uh, I mean, the trend is much better. The momentum can be not satisfied for you, even if the trend will be like long, for example, but the momentum will not be quite nice for you to take any trades. So better to skip that thing. So these some kind of notes that you need to have in your arsenal, in your thing that can help you to that can help you to make some decisions during the day. Like previously weekly high low, previously day high low, Asia high low, London low high, New York session, daily open, Dixie analysis, and so on. That all refers to the nodes that you need to have in your trading. The same thing is on crypto. The divergence is just one additional indicator that you can use if you are not confident with your setup and you need some more criteria to confirm that your idea is correct. But this is just a small part that I am not even using at all. This is nothing that will tell you to open a trade or something like that. That's the same as I don't know, to understand where is the liquidations on the heat map. That's nothing connected with the setup or with an open criteria factor. This is just one more little thing that can help you to get into the position. Daily trade plan. So you need to understand either it follows your daily trade plan or not. The rates. The first thing taken into account is the removal or the sweeps of swing high lows from H1. Since the swing most often lead to change of structure, at least a short-term lower time frame, which opens a lot of possibilities for lower time frame 3R. What I'm saying. So for example, we are on the 1 hour time frame, and that's what we need to look for before we'll start trading. So during the day, when we have some kind of liquidity sweep, let's say this one, you need to wait for that liquidity sweep. So when the 1 hour liquidity sweep will be taken, that's the time for you to look for the further trades. And you will see that after the liquidity sweep you have the imbalance forming, so the good momentum, the price is going lower, we are forming the reversal over here, and that's the time to wait for the pullback into the correct timing, maybe into the correct in the New York session and so on, and to wait for some lower time frame confirmations in the 1 hour order block to enter the continuation trade short for maybe these equal lows. That will be your profit target as your liquidity pool, right? The huge liquidity pool as a magnet where the price needs to go as fast as possible to collect. And of course, after we reach that pool, the volatility is finished, and there is no more sense to sit into the trade. So that's like a high time frame analysis, for example. Of course, that was a short momentum, short trend over here we can see, and we just need to find some things that will help us to open the trade. So when we are going to the lower time frame, that was the price, and you can see that in New York, especially exactly in New York, we came to our 1 hour order block where we can look for some type of confirmations, like again the same sweep of the liquidity, reversals that can happen over here, and the opening the trade from the touch of your buy to sell move somewhere here by going for that high time frame liquidity. Yeah, that's not 3-1, but as you can see, yeah, this is 3-1. It's still okay. I mean, you're reaching your profit target, and that's more than fine. So you have the synchronization of the sweep 1 hour, reversal of 1 hour, order block 1 hour, and here you have just quite the same thing. Sweep 3 minutes, reversal 3 minutes, and pullback for the 3 minutes, or let's say buy to sell move, but you can call that order block as well, just not to mix with the names. your brain. So the same thing, so confirmation of 1 hour and 3 minutes time frame in the correct timing, in the correct everything that can lead to your strategy, that you're targeting the proper profit target, can be a correct setup. So why not to take the trade? I mean, it matches with your risk reward as a 3-to-1 and so on. So that's what was saying about here, your trade plan over here in your checklist. So yes, I'm trading news. News is just the time for the highest volatility, and that's all. So if my trade should happen for 1 hour during the standard period of time, so during the news it will happen just for 3 minutes, maybe 2 minutes, maybe 5 minutes, but much faster than usual, because the news are just the fuel, but it's not something that I mean, changing the structure or changing some situation in the market. No, they're just increasing the volatility and increasing the price delivery to the point B, where the price was aiming for to go before, but just came much faster during the news, and that's all. Of course, for the newbies, you need to avoid trading the news, because there is no I mean, just because of the volatility, and if you don't know how to read the market, it can just eat your stop loss as fast as possible, and instead of losing 1%, you can lose 3 or 4%, because it will squeeze your stop loss, yeah. And that's happened quite often on the market. So not to harm again your statistic, your rules, your trades, avoid trading the news at the beginning. So the next thing, the structure, the high time frame 4 hour, 1 week, lower time frame 1 minute, 1 hour determines the high time frame determines direction and major positions for the near term, as 4 hours can direct on for up to 3, 4 or 5 days. Lower time frame, especially 1 hour, determines the intraday positions. So I don't care about the let's say sweeps on the daily. I mean, I am looking into that thing as well, but I don't care about that things so much as like at 1 hour sweeps, yeah, or maybe a weekly sweeps, because I mean, they're not happening so often for me during my intraday trading, so I do not care about these sweeps and about that how to say that, movements after collecting the liquidity from one of the highs or something like that. I mean, 1 hour liquidity sweep is more than enough for me to open the to look for the confirmations on the lower time frame, like 3 to 5 minutes. The same thing on crypto. On crypto, as we are using the higher time frames, we need to look for the 4 hours or daily sweeps to open the 15 minutes lower time frame or 30 minutes lower time frame confirmation entry. And the point of interest zone, a price environment, finding the price relative to premium, discount, imbalances, liquidity pools. What I'm saying is that the price to open the trade, it should be in the correct place. So we have the discount and premium. You know that our bias is long. We want to open only long trades. So we don't want to open any trades against the trend. So short trades are of course forbidden from the beginning. But when is the time to open the long trades? So we are still in the premium zone, and we see some, I don't know, some sweep over here, and we are thinking that, oh, this is a 1 hour sweep, so that's the time to open the trade. That's like a reversal happened over here, yeah, and then you're opening the trade over here, and then the price just collecting that liquidity and continue moving to the discount zone, to the initial like order block of the 1 hour, of the 4 hour higher time frame, where of course this type of sweeps over here and this type of reversal will be of course more high probability than opening the trade in the premium zone where the price is overbought. Of course, it's better to open the price in the discount and to target that type of liquidity, the external liquidity. So that's what I'm saying about the proper structure, the proper positioning of the price. Point of interest: sell to buy move, buy to sell move, order blocks, sponsored candles, or FUs, means basically the sweeps. That's the same thing as the order blocks, or the things that are collecting the liquidity, forming the imbalances, changing the structure on the high time frame. So these are the zones that are protected with the smart money, where the people don't want the price to go further lower, because first of all there is no more liquidity, the liquidity is already collected from this low, and there is no more sense to go lower. We just want to follow the trend. The price wants to and aiming to follow the trend. Instruments: you need to understand which instruments you're using, BTC, GBP, USD, and so on. The time frames: are you using which time frames you're using and for what purpose? Daily and weekly is a trade detection and global direction. 4 hour and intra week, like occasionally a day direction, yeah, because 4 hour and 1 hour basically might be the same, showing the same situation and the same type of candles and structure. So basic period for intraday work: 1 hour and 4 hours, basic point of interest zone, like for order blocks and all that type of things. M5 and M15 main position confirmation relative to H1. So after the price reached these type of the zones, that's the place for you to be more focused. You need to put the alerts on these type of time frames to go and to be more focused for the confirmations on these type of time frames. And of course, when that thing has happened, you can go, even if you're still not confident, or you want your trade even happening faster and you want like maybe one more confirmation, you can go with a M1 time frame to see that everything is correct, and that's the place to opening your trade or your position. That's the place where you need to match that with your sessions, just for your note. The time frame combinations: the crypto, the H1 rate, M5 boss, M15 rate, M3, M5 boss, M1 boss after confirmed and synchronized structure, and so on. That's combinations of the time frames with the crypto. For Forex, it's a little bit different. It's M1, M1, M3, M1, M5, M3. That's all the different combinations, and means the all different setups. So for example, what I'm saying, that that might be M5 sweep, and you might go from the M5 entry, from the M5 sell to buy move, but the price might catch it, and everything will be fine. But for the M3 time frame, the price will have a little bit different situation. Yeah, that's gonna be the M3 zone. And for the M3 zone, it will not touch your entry, and you will miss the opportunity to open the trade. So basically, the M5 setup worked for you, but M3 setup didn't work for you. And that what's basically mean what you need to backtest to understand. Either on GBP, most of the time the entries, the price making the pullback to the M5, or maybe to the M3, or maybe to the M1 that is happening somewhere here. Yeah, where your stop loss size might be quite small, and your 3 risk reward will be somewhere here, because during if you're opening from the M5 stop loss size, yeah, your 3 risk reward will be somewhere here, yeah, and you might wait for a long period of time. So that means the combinations of the setups that you need to backtest and to use. I will answer the questions about the psychology later on. That's in case if you missed my first part of the stream, where I was saying about the psychology and how to help and how to improve that. Risk management and trade management. What is the risk per trade? 1 to 3 always fixed, 30 or 50% if there is a potential to hold further. Like for example, your 3 to 1 reached, but there is a huge magnet for the price to go further up, and there is no context for the reversal. And of course you can fix some partially and take the another 30% for the further liquidity. Key swings are always the first trouble area, are the trouble area actually, where you need to close your trade straight away. For example, there is a 1 hour time frame. Yeah, this is a key swing, key swing, key swing. Yeah, and you're opening your trade over here on the 5 minutes time frame. You're opening your stop loss, your entry. You want to go up or somewhere here, but on the key swing, yeah, you see that there is like some kind of reversal happening or something like that. Of course, fully exit here. No need to go for further up. This is your main trouble area, first trouble area where you need to fix your trades. Do not hope. Fix it on your first liquidity. So the embossed exit positions according to the structure, inside consolidations, if the price is the area of the large range fair value gaps, then the position can be closed arbitrarily on the lower time frame. What are the entry criteria? Against the trend, according to the trend, and so on. Like if it is against the trend, basically I'm not suggesting you to open the trades against the trend, but of course you can do that, but the probability will be lower. And there are some parts of rules that you can use that can help you to avoid some stupid mistakes, like make sure the price has reached point of interest zone. Any positions opening signals before reaching point of interest zone you need to ignore, and so on. According to the trend, opening a position at the like opening the position of the continuation after the manipulation of the structure update, or opening position in consolidation to continue, partially fixing or intermediate first trouble areas. The position should have the main synchronization with M15 or H1. So like there are some rules that you should not ignore and you need to follow them. Of course, it's quite hard to match and it's quite hard to combine all that when you don't understand the concept. That is why the academy is for, right? To help you with any of your questions on any of the stage of your trades development. But that's something crucial that you need to understand. That's not about triangles, wedges, and like, oh, I see the triangle, let's go to the moon. Yeah, don't be stupid. I mean, don't be a sheep or the hamster. And that's not actually quite hard thing to understand. Yeah, there might be some new words for you, but it's basically the simple thing to combine and to follow after you will have some couple of experience using all the things and backtesting some of the setups. Yeah, this is a routine work that might be a little bit boring, but guys, I mean, we are traders. We are not playing in the kinder playground or something like that. Yeah, this is like the hardest job to make the biggest money, and either you're working here, either you're just like splitting into the roof and like waiting for the pullback. So the setups like liquidity rate plus reversal, or coming to the order block plus reversal, and there are what do we need to do in the bullish day in London or in the bearish day in the London kill zone, and so on. There is some kind of combinations that you need to use and to have in your trading plan. The workbook, what should be the context, yeah, what you need to look for from the biggest to the lowest time frame. So we're always going from the TDA or top-down analysis. So we are going from the highest time frame to the lowest time frame. Yeah. So first of all, we are going for like daily time frame, trying to look what is happening over here. Then we are changing our time frame to the like 4 hours to see the things, the 1 hour, setting our point of interest zones, looking for sweeps, looking for the structure, then going for the M15, looking for the confirmations for the sessions, for the zones, then going for the M3 for the confirmations, opening the trade, and so on. So only like that, not from the smallest to the biggest one. And of course, using only one time frame will not bring you a profit. Only synchronization of 2 time frames, higher and lower. Yeah, using like top-down analysis like 4 or 5 time frames doesn't mean you need to synchronize all of them. Yeah, that's just for your understanding of what you need to do today, what is your bias, what is your context for today, and either it's long or short and so on. But you need to combine only one, like let's say H1, and only one, let's say M5. And these two time frames need to be in the synchronization, and that's more than enough for you to open a trade. What else? What else? Let's say the demons, of course. Look, trying to synchronize more than two time frames, that's not having no any sense. I mean, you will wait for this synchronization for ages, and that's, I mean, has no logic. Just higher time frame and lower time frame synchronization more than enough. Maybe it can be higher time frame, middle time frame, like let's say daily long, middle time frame like H4 or H1 also long, and lower time frame like M5, M3 for confirmation of entry, and that's all. Yeah, in this case it might be 3 time frames, but most of the time H1 or daily will be the same bias, and to close your 3 risk reward will be more than enough to use only one 2 time frame combination. About the backtesting, I have another stream for that, and that's another topic that maybe we will speak about later on. I was speaking about that before. Long period of time you need to use the bar replay, you need to go like that, you need to set up this, and you need to start looking for the trades. You need to like watch for something, going for that thing, looking for the liquidity pool, saying that, oh, we need to collect that, or maybe it's an order block or not, and then just trying to backtest that and to see how this liquidity pool is collecting, and saying that, yeah, this order block is not valid because that was no liquidity sweep, and so on. And that's how you're making the backtest. But that's a crucial job. Let's not pay a lot of attention on that right now. The demons, the triggers, track the nature and cause of unstable states. Emotions, thinking out loud what happens after or before opening a trade. I will give you a suggestion about your bias, about, you know, a lot of traders that understand a couple of terminology about the order block and point of interest zones. They think that, oh, I'm the smartest trader ever. I know what to do. And when they have something in their mind like, oh, today will be a long, or today I see the sweep of from the low, and I'm sure 100% that it will be a long. And when he has this thing in his mind that it will be long, he doesn't care about another information that might help him to understand that maybe it's not a long, maybe it's a short today, to reach some kind of imbalances over here, or some other type of zones, or anything else. Yeah, just because he's so thinking that he's too smart for this trading, or too smart to be wrong. Yeah, that's the biggest problem of most of the traders. So when you have some kind of bias according to your chart, think twice and ask yourself a question. Is there any opportunity, or is there any chance that I might be wrong? Or if I was thinking that this is a long, can I find any factors or any criteria that can help me that I'm wrong, and that might be a short today or right now? Yeah, so maybe I need to keep my long and try to find any criteria. If you will not find any criteria for short, maybe you are correct about your long trade, and that can really help you. The most obvious is obviously wrong. That's correct. Yeah, when you see something that can see the whole mess of the people, like the so predictable reversal, most of the time it will not happen. So yeah, you need to see to find something else that can help you to confirm your entry. So yeah, emotions, technical evaluation, working notes concerning the market and its influence, tracking external factors, health, sleep, mood. It's so crucial, guys. I finished to smoke, I finished to drink, I have a lot of energy right now, my mind is clear. I don't think that it will suit to you, but I mean, that's something that helps me to be a good trader with a smooth psychology. Even having the academy, yeah, some people might think that, oh, this is just like I don't know, why do you open the academy of trading, maybe because you're not earning some money on trading. Why do you need this if you're earning like a lot of money, if you have like 400k account on Forex and each of your trade is like 3%, so basically it means like $6,000, so you might be a millionaire or at least like half a millionaire. I don't know, what do you think? So why do you have this academy where you're like spending your time and teaching people and so on? This is just like the most famous question. The answer is simple. It's just because my psychology is weak, as the same as yours, and I like to play like poker sometimes, and I'm to make my statistic and win rate better, I need to help people. And when I'm helping people, and when I'm educating people, and when I'm providing my charts, my thoughts and discussing that with my students and so on, that helps me to keep myself on track. That helps me to keep my psychology stronger, and that helps me to avoid some stupid situations that I could do without having my academy. So after I started to educate people, my statistic is starting to be much higher than it was before. And that's actually the thing, how I'm managing my psychology and how I'm managing my personal problem. You might manage that with some other things that can help you, but that's what helps me, and that's all. And you can understand that this is a win-win situation where you are helping me to have my win rate better, and I can help you to become an independent traders and founded traders as fast as possible. Yeah, so that's a win-win situation, and I'm really proud of that people are so thankful to me after passing the academy. So the problem-solving order. What's the problem? Why does this problem exist? What is the flow? What are the consequences, the solution to the problem, and so on. So we have, to upgrade the psychology. In our academy, we are using this, our personal workspace. Beside that fact, I've developed, a lot of people they're just saying about the psychology that is so crucial, that is so important, but they don't know how to deal with that and how to manage that, and how to understand either your problem is in trading, in the charts itself that you don't know how to read, or it's your psychology. Yeah. So in this case, I've developed the journal of emotions with a lot of tests that can help you to measuring the trade stress index to understand should you trade right now or not. It's like a checklist or a weekly revision that can help you to understand either you improving your psychology or not, or the table of perceived and real anxiety, or the ABCD table that can help you to have the activating event and so on. So that's the crucial part of the trading that we need to use on an everyday basis that can help us to trade. And that's what we are using in the academy every day, every hour. As well as analyzing the trade journal, as well as the back tests. The trade journal that we are using, it's so automated. You can use that. You can watch what works better for you, what you should avoid, what you should improve, what position works for you best, in which session did you trade and did you perform the best, what pair performed for you the best, and so on. What did you follow the plan, did you win, and so on. When you're opening the trade, we are having like even the psychological journal that can help you to answer the trade. Do I feel greedy? Does the position meet all the criteria on my trading strategy? Am I locked into a trading scenario? And so on, and so on, and so on. You can even link your charts here to analyze them after that, and so on. All this trading journal is automated, and it's so easy to track and to understand what to improve and what to avoid. So that's a crucial part that I've spent a lot of time to do that trading journal for traders that can help them with trading. And that's something that really can help you if you don't know where to start, how to combine all that, and so on. Beside the fact that we have the frequently asked questions, trading notes, library with the professional psychologist in the team, where that helps you on every stage of your frustration and evaluation as a trader, and so on. The hello trading that helps you to start from the very beginning, and so on. Everything is so structured, and of course that's something that can really save your time. I don't think, if not maybe 10 times, but 5 times, 100%. I mean 100%. So I mean, that's just about losing money on your gambling on and wasting your time that we don't have as actually as much, or just doing some correct things straight away from the beginning. I mean, that's your choice. Let me get back to the chat. What we have here, a lot of things, a lot of messages. That's actually good. How to solve problem with the psychology of forcing entry even if it is not an optimum trade, those market highest risk. I think I've already answered onto that question. Do you encourage using hedging, Scrooge, for start? Hedging, that's not something that will help you. Time frames are live, yes. For positional plays on BTC it can happen. How and where do I do the backtesting? I told already. Many times by teaching you refine your own learning. Yes, I'm not refining my own learning, I'm refining about the thing that we are using that helps us as a traders. You are asking me questions how to solve the problems, and I'm refining back to my psychology the list that we are using, and that helps our students to how to handle that thing. That's all. I have the list of it and we are using that, and I'm just refining, of course, how to answer your question without refining to that thing. I mean, come on. And for entry, you both entry on limit order or market order? Only limit order. Limit order just because if I have my plan, if I have my 3-to-1 strategy, and I want the price, the limit order is basically for to follow the risk. I want to open at the place where I want, not where the market will allow me to open, because if I will open the market order, it will squeeze a little bit, it will open my trade somewhere here, and of course after reaching 3 risk reward, it will not be a risk reward, 3 risk reward, it will be something like maybe 2-to-1 or some even less than this point, and of course that's losing all the sense and the logic of opening the trade. So of course it's only the limit order. I'm not rushing the things, I'm not trying to catch my train that already passed, you know. So I need to do the how to say that, the analysis in advance, and only waiting for the trade with my limit order, no market orders at all. No sense in opening the market orders. I want to become a funded trader in a few months. Can your academy help? Has your academy done this with the others? That's actually what our academy is mostly based on. Our second mentor, Perfetto, is basically helping every day how to pass the funded trading. Most of the time we are the Forex traders, because crypto is not performing as good as it might. So we are trading Forex all the time, and we are actually preparing you to be funded as fast as possible. Yeah. But beside that fact, we are also trading crypto as well, and we are trading altcoins, BTC, Ethereum, if it is a situation or the good market conditions to trade that. We are not trading just because we want to trade or something like that. If there is a good opportunity, we are trading. But most of the time, the good opportunity is only for Forex, commodities, and indices. So that is why we are more focusing onto that technical part and most technical market. But that's the concept itself, it's used for any type of the market, so it doesn't matter for that. So yeah. No, I don't think that getting founded is easy and taking payout is the tricky. It's if you getting founded and you will get payout. Don't worry about that. I mean, I have a lot of good funded companies that we are using, and of course they are paying you 100% of time. Yeah, there are some like my Forex funds that scammed, and you should understand that you should not rely on these companies as your last chance. Yeah, but all of them like FTMO and some others are legit and that you can use, and they are fine. So, but of course, if you don't know how to trade, trying to get funded will be just waste of time. So you need to be prepared for that and be confident about your trading. But of course, it's the easiest start for most of the traders because you're not using your own funds. You're actually using the funds of the company, and yeah, you have some objectives that can harm your psychology. That is why after that you need to mostly try to earn some money and then go to trade with your own money without any without using any prop companies. But I mean, come on, they're totally legit and fine. um, so my my goal is to become a founded trader. Is it possible to quit my full-time? If you will become a founded trader and your um, and you will make confidently the same amount of money at least that you did on your full-time job before, definitely you can quit your job, but you should not quit your job before you will be a founded consistent trader. Definitely not. First of all, you need to combine that things, and only after that, if you will feel confidence, you need to quit your job. Yeah. How do you know that the share is going to reverse and target the long liquidity? For example, for perp USDT you shared, what makes you think that it's worth a 3-to-1? What I mean is there are about the perp, I mean, for now the chart just looking nice. It may have some volatility to go further up. I mean, that was a liquidity sweep from below, so it was a nice opportunity to earn some money. Even if it will not reach that liquidity pool that I've highlighted, it still can be a nice opportunity to earn some money. What I mean is there are psychological hurdles that need to be overcome. The evaluation is just a sim, so passing is easy. Passing is not easy if you don't know how to pass them, because you have two stages, and if you are not a consistent trader, if you are not following the objectives, you can exceed these objectives so fast, and that is why it's not so easy if you don't know the rules how to pass that. Psychological things, you mean about the psychological things about the objectives in the prop companies, or what do you mean? I don't understand. Anyway, let's get back a little bit to the strategy. A lot of things that you need to use in the strategy, like before the beginning of the trading session, yeah, there are some things actually about them that calls session work. Yeah, so when you're looking for a trade, and of course that needs to be a pre-session work and after session work. The pre-session work is something that you're analyzing the chart before you start trading, so like half an hour or 1 hour before your kill zone starts. You need to analyze the chart to see if there is any opportunity for your setup for today. What is the order flow? What are the where is the supply and demand? What are the opens? Trade plan for the development of the scenario in two directions. It's a disability. You need to understand, and so on. So the general things what you're looking for. The position management, the position opening, the trade guides. If it is like the swing trades, yeah, the high time frame trades that can be held for last for maybe 2 weeks, 1 month, something like that. that can be like 2-3% of your risk, because I mean that's not an intraday trades, and of course they are more high probability, but they're lasts longer than intraday. So of course you might increase your risk reward to have relevant payout for your waiting time. So if you're opening the trades on 1 hour, the position can be last for around 3 days, something like that. That's about not the rule, but that's standard expectations about the volatility. If the trade is open on 4 hours, it can be even hold to like 2 weeks. If you open on the daily time frame, on daily confirmation, it can be like a 2 months trade or something like that. So it's quite a long-term trade. And of course, if it is a 1 week trade, it might be last for 6 months or maybe 1 year or something like that. So it's almost kind of half of investing, not even a trading. Yeah. So for the lower time frame trades, I'm suggesting to use only 1% of risk. There are some tips, of course, that can help you in trading as well. Know in advance the most popular volumes on the major pairs. So, for example, know the volume to open a position on BTC in the range from 50 to 500 pips, with each step increasing by 50 pips, not rounded values, round up. That means that you don't need to calculate each time what type of volume you need to open according to your stop loss size. You should know that in advance, not to lose the time or not to lose the opportunity to enter the trade. Yeah. If you have on one PC or one monitor, open terminal on your phone to speed up the time of entering and get rid of switching between windows, right? That also can help you to execute fast trades. To work with a large number of pairs, it is necessary to have a separate tab opened for each pair in order to cut time of loading and searching for quotation. I advise to do this both in TradingView and on the exchange. The opening of a trade can be accelerated by entering the price from the market depths. Yeah? You can use the option for quick limit order entry at any exchange by simply clicking on the price from the dial, and it will quickly appear in the position opening menu. So basically you can just click the market depths somewhere where you want to open the trade, instead of just inserting the amount or the place of the order by manually. That also can help you to make the trade opening faster. And the fourth thing is, at the beginning of the day, score the most popular volume in the positions control panel and at once in case of emergency. Often it is a reduced version of the position. Yeah, that's all what can help you to execute the trade faster. Okay, I'm a little bit tired to speak, so that's a time for the questions, if you have any left right now, and we'll see who won the mentorship, the whole library for free, where you can use the workspace, where you can use the library, where you can use the education materials, the strategy and templates, all the frequently asked questions like what are the sell to buy moves, what are the creek, point of entry zones, tips, terminology, ICT terminology, what are the funding rates, trade patterns, open interest, things for crypto, things for Forex, everything. So the Holy Grail is here. Let's see who's gonna win it for today. Waiting for your questions. For now, if no questions will be right now, any other questions for now, I think we'll see who is winning right now. Which question do I liked today? About getting founded, about your question, what do they ask? They have some objectives. I mean, they have different type of accounts, of the amount of accounts. Actually, they splitting the the profit 80% to you and 20% to them, but they have some objectives to pass these accounts, and I mean you can't go more than 10% losses to your account, like 5% losses per day, and you have some objectives that you need to reach before, and like evaluation and challenge process stages that you need to reach before they will give you the initial funded account. But there are some accounts that you can pass from for like maybe 1 week and be funded after 1 week already. So they're not looking to the type of how you trade and so on. This is not just like a legit companies and nothing related to a legit forex brokers. This is just like a different system that is working really nice for them, but can be a really good start for you as a trader, not to use your own funds. But this is a different topic. I will record some video about that later on. So many times. What else? Any questions? For now, the questions of eliminated nothing, or just because he was active, he is winning right now, the Notion guide, but I'm still waiting. Maybe there are some others. I hope that was helpful for you actually about the strategies, and you will try to be at least a little bit more conscious than before, than by just blindly following the scam signals or something that is not working at all, or following some spaceships charts with the EMAS indicators and all other divergences, volumes, profiles, and oh my god. Yeah, you already have it actually. Yeah, I forgot it. That's why I mean by psychological triggers. I already have it. Yeah, true. I forgot. Planning to take the phase 1 and 2 to be funded, but I don't know if I can make it. Have 2+ years experience trading already. The answer is simple. If you don't know if you can make it, and if you're not confident, don't waste your time. I mean, if you're confident about your strategy, if you know that you're earning money on your paper trading, on your forward trading, not just on your backtest trading, and you're confident and profitable, you know your rules, you know all the details about the cancellation criteria of your setup and what to take, what to trade, and you have your trade plan and you're confident, then that's a time to take that. But if you still don't know either to do that or not, I'm not suggesting you to try. It was a machine gun of knowledge. Thanks. I hope that helps. 90% off coupons? Maybe. Okay, Thanos, do you want that? What trader are you, Scrooge? Scalper? Of course not. Scalping has no logic in the strategies. Scalping is a gambling, because that's small time frames and so on, most of the time. So that's intraday trading, as forex intraday trading, and as well as crypto intraday if there are some opportunities. That's the only thing that can fit my psychology type and the market technique and the logic of it. Yeah. Yeah, I also do swing trades. I also have my altcoins portfolio for the long-term trades as well. Yeah, but they're all different strategies. Okay, so I think for today I'm gonna present the Thanos Mac, the this mentorship program that we have with the library and workspace. So please DM me in our public section, um, and or DM me or just write me in the public section. So I'm gonna present it to you after the stream is will finished. No, you just need to focus on one pair. I mean, I'm trading either just euro, either just GBP, and that's more than enough. You don't need thousands of them. So I mean, the focusing on euro, GBP, gold, I mean over, over trading. You will, if you will look for the gold and London kill zone or the GBP kill zone, you will lose the proper analysis for euro and vice versa. So that's not the case. You need to focus on one, maximum two pairs, but I'm suggesting at the beginning only at one, the one that works for you the best, that you can understand, that you can read, and so on, as well as on crypto. Don't try to go for thousands of altcoins. Choose the major pair, of course, like BTC and something like that, and trade that. That's more than enough for you to earn money with the logic. All other things will be a gamble. How much time you use? I have answered already. I'm trading just Frankfurt and London kill zone. If there is no, if there is no, like, let's say, this is 9 o'clock in the morning. This is a Frankfurt zone, 1 hour till 10 o'clock. If there is nothing, no trade in Frankfurt and no trade in the beginning of London, like until 10:35, so I'm skipping my day to trade. All the conscious and smart trades for me are during this period of time. So basically, I'm spending 1 hour and a half to be focused, and maybe let's say 2 hours in total to make my pre-session work and session work, and that's all. And of course, after finished the trading day, I'm spending like half an hour for after session work to analyze the charts, to analyze my trading journal, my trading day, and so on, and maybe to make some predictions about the further day. There is no more sense to trade and to wait for more. If you missed the opportunity or there were no your setup in the beginning of the session, there is no sense to wait later on, because the market will switch off the volatility, and you will just wait for your stop loss, like you're open somewhere here, the trade waiting for more, but the market has switched off the volatility, so it will need some more fuel to go to collect the liquidity and to continue moving down. So that's definitely not the time to trade. I'm showing that briefly, of course, but you need to understand why I'm not trading in the end of the session or in the between the sessions and something like that. Indices, I'm not trading indices as much, but our second mentor Perfetto, he is backtesting indices right now, because I mean that's a good opportunity, the best opportunity actually, to combine the work, your main job and your trading. So after we will finish the backtest for 2 years, we will present our materials and how to use them and how to trade them. But as I told you earlier, I don't need to defocus on each of the things. But I can, of course, I can give some analysis. We are providing the analysis in the community, but we don't need to trade them. Yes, of course, it will help you to improve faster. Your trade is closed same day is open. It's closed same session. Trading session is open. Trading kill zone session. So basically, if I'm opening my trade in the beginning of London session, I'm closing them in the end of the London session. Basically, because it reached my targets already, and like I'm basically collecting the Asia high, and then my target is to collect the Asia low. That's all. I don't need to go for more. I'm not taking my trade over risks or holding them over per night, and there is no sense for it. I'm an intraday trader, yes. Screw to see the market session. For the market session, it's the MKT sessions. I will send it in the public section. The settings that I have and how it, the proper name of the indicator. Okay, guys, thank you so much. Margin, that's not the case. I mean, 1 to 100, but that's doesn't matter. According to my size of my deposit and to the risk that I'm using, and I don't care. Okay, guys, thanks. That was a really nice conference. I hope it helped to a lot of you. I'm for the winner. I'm waiting in the public section, and remind me to share the indicator also there. Thank you. Bye bye.